Welcome friends to my YouTube channel Jupiter Finance. Today we'll be learning about how you can earn interest income from your equity shares. Yes, you have heard it right. What I'm trying to say is the amount of securities, the quantity of shares lying idle in demat account can be utilized to earn income without actually selling them. So this is the disclaimer. This video is for educational purposes only and is not financial investment advice. I am not a SEBI-registered advisor. Investment in stocks, mutual funds, real estate, digital assets, and other instruments involve risk, including possible loss of capital. Past performance is not a guarantee of future results. Please do your own research and consult a SEBI-registered financial advisor before making any investment. Viewers are responsible for their own tax and regulatory compliance. What is securities lending and borrowing? So, securities lending and borrowing is a platform wherein people having shares in the demat account can lend those shares for a temporary period at a fees to people who are in need of those shares for a limited time period. So this mechanism is already available in the Indian market. So it's like a temporary loan. The shares are lent from one investor to another. The purpose, why does the borrower borrow? So borrower typically use these shares for short selling, arbitrage opportunities, or to meet any delivery obligations. The lenders benefit in the form of earning fees by putting the idle shares to work, generating income without having to sell their holdings. So the features about the securities lending and borrowing mechanism is that it's exchange traded. Unlike over the counter markets prevalent in many countries, India's SLB operates through stock exchanges like NSE and BSE. It is a guaranteed trade. The counterparty risk is assumed by NSCCL and ICCL. Zero counterparty risk. This is exchange back guarantee eliminates counterparty risk for lenders. Safety and transparency. This is centralized regulated environment ensures maximum safety and transparency. How lenders earn passive income on idle shares. Lending shares in Indian SLB market offers a powerful way to generate passive income while retaining full ownership benefits. The lenders get a lending fees, that's an income for them. They retain the corporate benefits, whatever dividend, whatever bonus shares, everything is there is rightfully credited to the lender's account, and it's tax neutral as there is no capital gains on it. Example is lending 1000 shares of a high demand blue chip stock can consistently generate monthly fees, boosting your overall portfolio returns. The benefits of SLB beyond earnings, portfolio efficiency and flexibility is that no sale is required if you want to earn out of your demat balance. The lending can be done for flexible durations, no minimum quantity. You can even lend one share. The income is dynamic. It's like the price for the share fees for the lenders is determined by the demand and supply forces. So the price is really dynamic. Now we'll understand why the borrowers want to borrow shares. Some of the borrowers have done short selling or they intend to do short selling. So in that case, they anticipate a drop in the prices and to buy them back cheaper later and profit from them. So that is one reason borrowers borrow. Another reason is to avoid heavy auction penalties. In case the person has sold the shares but he doesn't have those shares in the demat account, he'll have to pay the auction penalties. To avoid that, borrowers borrow securities. Third reason is arbitrage, exploiting price discrepancies between different markets. Say cash is trading at X price, derivative is trading at X price. To lock in a risk-free profits, they have a strategy. To meet that strategy, they borrow securities. Now we'll learn about the safeguards and risk protections for lenders. Clearing counterparties. The clearing corporation guarantees all settlements, completely eliminating counterparty default risk for lenders. All SLB trades are meticulously monitored and regulated by SEBI. Borrowers are required to provide 100% collateral, either cash or eligible securities. The markets operate on a simultaneous sale and repurchase model, further safeguarding lenders' position. Now we'll see the real world impact, market efficiency and investor empowerment. SLB is not just a tool for individual earnings, it is a crucial component of healthy, dynamic financial ecosystem in India. Over 370 stocks are actively available on the NSE SLB platform, continuously updated to reflect market needs. SLB significantly reduces settlement failures and the need for costly auction penalties for sellers. It empowers the long-term investors to monetize their shareholdings. By supporting short sellers and arbitrageurs, SLB contributes to higher bid-ask spreads and overall market depth. We'll look at a case study. Let's see the potential earnings with a practical example. Say a scenario: an investor holds 5,000 shares of a high quality blue chip frontline stock. He lends these shares via the SLB mechanism. So he will be earning monthly lending fees average between 0.2% to 0.5% of the stock's value. This translates to additional 2.4 to 6% annualized return. All dividends and corporate actions, as I said before, are credited directly to the lender. This income is earned by the lender without having to sell their shares or losing any ownership rights. So the conclusion is, unlock idle shares for safe additional income. The Indian SLB market offers a secure exchange-backed avenue to generate additional income from your idle shares. So there is zero risk, flexible and steady, ideal for investors. If you like the video, do share it with your friends and family, and do like and subscribe to my channel. Thank you.